Hello everyone. In this video, we'll continue with the modern approach. What does modern approach says? What are the four concepts? Let's see. The concept number one is, or I can just write here, the four basic concepts are as follows. Number one is money measurement. Money measurement concept. What does it say? It says that accounts or accountancy, the subject, helps us to record all the transactions which can be calculated in terms of money. Okay, I will be writing here that accounts record all the transactions which can be valued in terms of money. If it can be valued in terms of money, you can record it. Say for example, understand this very carefully. Suppose you can say that you have purchased a land. You can write that purchased land for say 1 crore. Or you have purchased a building, or if you purchase a furniture, if you have paid a rent, if you received an income, if you have paid a salary, if you are paying wages, if you are paying transport charges or whatever. If there is a money involved, then it is called as that you can obviously record the transaction. That is what money measurement concept is saying. If suppose there is some deed, or you can say that somebody helped you, you cannot write that people helping me, that you cannot write in accountancy. Okay, you cannot value friendship in terms of money. That's why we cannot record all those things. Only the transactions which are valued in terms of money. As soon as I say this now, a student asks me, sir, suppose we purchase a land, or if we purchase a land, then we can write it for sure because you can calculate in the terms of money. What if we receive gift, or what if we receive a donation from the government? Donation from the government. What will happen then? See, if suppose you are receiving donation from the government, about you can say you get a land as a donation. Suppose I want to open a charitable hospital and government tells me, okay, we will provide you the land to construct the hospital. Okay, so now you will say, sir, you received the land but you have not made any payment to the government. Will you still write that land in the books of accounts? Will accounts allow that? Accounts will definitely allow that. But why, sir? You said money should be involved. I am saying if the transaction can be valued in terms of money. See, when I am receiving the land, I know that this land costs 1 crore or 2 crore rupees, whatever is the amount. I have not paid that amount. I am receiving the land as a donation. But we know that there is a value for that particular land. If there is a value for particular land and I know that I can calculate the value of the land in terms of money, I will definitely write that in the books of accounts. Simple enough. It doesn't matter whether I have made the payment or not. The important thing is whether I can calculate that value in terms of money. Now, point number B is periodicity concept. What does periodicity concept say? See, suppose the business is running, we are doing a business. Now, the business will run for months, years and years. But we have to prepare books of accounts. Books of accounts are what? That we have to write the record, all the financial transaction, whatever event happening in our business. But now I have to define a particular time so that I can say, okay, in these particular months, these 3 months or these 6 months or these 9 months, I have done this business, I have earned this profit, I have made this sales, I have paid this much money, I have purchased this much goods. So what account says is entire life of a business is broken into different periods and each period is called as accounting year. Simple enough. Then accounting year for our country is 1st April to 31st March. See, generally you can take any accounting year, but in most of the sums, in most of the cases, this is the year we generally use, 1st April to 31st March. This is also the financial year of our country. Sir, can accounting year be like from 1st June to 30th May? Yes. Accounting year can be anything, you can select whichever year, but more than 95-99% this is the year what India uses. Okay. Now, remember this thing that we prepare books of accounts, and there we prepare two most important things. What are they? First is profit and loss account. Profit and loss account, which is a period statement because it provides the details about income expenses for a particular year. And another thing we prepare is balance sheet, which is a point statement, or you can say it provides the detail as on particular day, or you can say as on the last day. Which is the last day? 31st March. As on 31st March, what is the financial position of the business, whether business is running properly, how much assets do we have, how much liability we have. These all things we will discuss in the further videos. I am just telling you right now that balance sheet tells you what is the position, how strong is your company as on 31st March, as on the last day of the year. Period statement provides the details of the income expense from 1st April to 31st March. Simple enough. Now, concept number 3 we have here. Business entity concept. Listen, be very careful, okay? What does business entity concept says? It says that owner of the business and business itself, they both are different person. Sir, but owner owns the business, so whatever owner is doing, that is correct. See, owner has all the control of the business, okay? But remember one thing, suppose you are purchasing anything, purchased goods from somebody, then when you will be signing it, you have to put a stamp also. That stamp you will put of your particular business. For say, I can say here, suppose I have a shirt manufacturing company, owner Ram, and Ram has a business called as Ram Shirts. Okay. Now suppose Ram produces shirts. Now if he is purchasing raw material, thread, whatever is used for manufacturing shirts, he is purchasing from somebody. When he is purchasing, he will put the stamp on the purchase bill or whatever on the sales bill, everything. That stamp what he will be putting, that is of Ram Shirts. and then Ram will be signing this. What does it mean? That Ram as a owner is signing, and Ram Shirts as a business takes the responsibility of paying the amount what he has purchased. See, you can say, but sir, Ram is the owner, he will be taking all the decision. That is fair enough, but remember one thing. Accounts says that they are two different persons. Ram is different, Ram Shirts company is different. That's why accounts says that the business itself is an artificial person. Business entity is an artificial person, and accounts is prepared from the viewpoint of business and not from the viewpoint of owner. Why? Understand again. Suppose owner withdraws 5,000 rupees from business. Okay. Now, owner is different, business is obviously different. Only then in business accounts book, business will be writing that owner has withdrawn 5,000. If suppose they both are one, then you will not write anything. Understood this part? If I am paying myself 5,000 rupees, I cannot write anything. But if business is paying 5,000 rupees to the owners, then only business can write in the books of accounts that okay, I have given 5,000 rupees to the owners. Remember this. Whenever there is a money involved, business is different, owner is different. Understand this very, very carefully. Okay. On the very small scale, when we are talking about sole proprietorship, then you can say that owner and business are the same. But when we are preparing accounts at any level, whether small scale of business, big scale of business, business is entirely different, owner is entirely different. Remember this. Accounts says that books of accounts will be always prepared from the viewpoint of business. There is no, we are not preparing books of accounts from the viewpoint of owner. Understood? Now, concept number 4 or concept is going concern concept. What does this say? Very, very easy. That going concern says that the concern or the business entity, concern is nothing but the business entity, concern is nothing but this, it is assumed that business will be there for next year also. If nothing is mentioned that business has so much losses, we are closing the business, we are dissolving the business, if nothing is mentioned, we assume that business will be continued next year. This is a simple assumption. Obviously everyone would like to continue their business forever. So going concern concept says we assume that it is assumed that business will be continued for next year also. Okay, understood? These are the 4 basic concepts which are very necessary for us to understand before beginning with the accounting that we will learn in the future videos. Simple. Now see, these are our 4 concepts that we are supposed to understand before moving further. Now in the next video we will be learning about the 4 pillars of accountancy. Thank you so much.